Alright, this is an update on gold. This one's going to be relatively quick here. We experienced a major bull market in gold from 2008 to 2011. We saw a top in early September. We saw a sharp correction down in September, a very typical average bear market rally up into November, and then a leg down that slightly undercut this September low, and now we've had another rally from here. So the question is this a continuing bull market or is this a bear market? I've gone over some of this on the blog, but a bear market rally should not exceed the high of this prior leg down. So that puts a cap on where it should be. So if you're going to short gold, you need to have a stop there. If it breaks above that level, that's not characteristic of a bear market. I don't think that's going to happen. I don't think it's going to break there. This box here, this red box, is basically what I've looking at as an 80% box. So most of the rallies in gold, they last between 1 to about 3 months, and most of them, as far as how much of the prior leg down they retrace, are between 40 to 80%. We've already overshot the probability, 80% probability on price there. So the price is definitely stretched. We're getting to the time frame where we can see a high here now. What would that look like? It may form here. It may already be in. However, the ideal would be for it to poke up above this high right here. So poke up and then reverse and get some type of a stochastic sell signal, or a close back below these lows there. If that happens, you could short gold, you could go inverse gold. I think it would be a great trade. However, you have to have that stop there, because if it spiked up there, closed down, and broke up there again, it could make a significant continuation move there. So that's what to look for here. This green line is just a projection of this last rally here up from this low. So we're basically, as of maybe Tuesday, going to equal the time frame of that. As soon as we surpass the time frame of that leg up, we should be in the territory here for this thing to complete a top and to enter a significant breakdown phase and start the next leg down. Where will that leg go? I don't really know. My suspicion is that it should, at a minimum, take out this low, which was the low of the consolidation before this last spike up on the fear of debt default and all that stuff that happened this last summer with stocks. So I think it should at least go down to there. However, I think that if crude oil makes the type of move that it's set up to make, if stocks do top, if we do get a deflationary theme, I think it may actually come down and closer to the 1300 level. That's a pretty big move, maybe 30% or so, but it's not unreasonable given the context of some of the other stuff here. As far as what the smart money is doing on gold, as of last week, there was a minor sell signal in gold. So the momentum of the selling was picking up here over the last several weeks in gold. And I think that's significant in that we saw that big spike in gold a couple weeks ago on the Fed announcement that they're going to keep interest rates very low for an extended time, and the smart money continued to sell gold after that. So they're, even despite the news and all that, they're taking a counter trend position to this. So in a continuing downtrend, all you really need is a minor type of a sell signal, just enough to let the momentum of the selling pick up, and then it should force the market down. If you look at the, this is a 8-period stochastics, but it was basically oversold or close to oversold down here at the December low, and it's had time now over the last 7 weeks, 6-7 weeks to cycle back up, basically to overbought here. We did see we did see a swing high this week, so maybe we get another push higher to create that ideal top, but we already have had a weekly swing high here. If the market breaks down below here, we may see the market drop there. One thing I guess I will note, let me click over to the GLD ETF. The GLD ETF did take out that high that I showed on the other chart, which was a nearest futures continuation chart, and the cash gold price did exceed that as well. So maybe that's all it needed to do before a high is made there, but the futures market typically will run the stops at a high like that before it continues on a next bear market leg down. So the stochastics here again is in a sell signal. There is a potential for this to be a little mini ABC type of correction, find some support here and move up. We can see this upper Bollinger Band starting to roll over and flatten out here. So it'd be nice to see a few days of correction and then another spike higher, give these bands time to start to squeeze a little bit. Maybe this would spike and touch the top band and then reverse and close lower, and that would give about a perfect sell setup there. So I have some out of the money put options on gold currently, and I'll be looking to add to that if this setup develops like I'd like it to see. As far as which ones I'll buy, I'm thinking the June 150s, possibly the April 150s, but we should definitely see a move down below this low. So how far below that I already kind of touched on. So you can do some background on that too, but the projection would be for a pretty hefty move to the downside there on gold. So that's what's going on in gold. I'm going to show the US dollar as well, and I'll just include that in this update. And this will be very brief. But there is one or two very important things I wanted to point out. This is the Euro US dollar chart, and what I'm showing here is possibly an ABC type of pattern. I view this as the initial breakdown in the euro, and really if this was a dollar index chart this might make more sense, but this was the initial breakout move in the US dollar, and that occurred after the top in gold from this level here. Then we had a rally in the euro. Then we had this decline in the euro, which was pretty large from October to January there. However, it happened slower than the rally did, so it took more time to retrace this move than this move took to form. So this is not really a downtrending psychological price logic type of move. So what I'm viewing this as an A, as a B, and it's a pretty deep wave B, and it retraced, it went beyond the 138.2 external retracement of this move. When that's the case, if an ABC flat pattern is forming, there's no way it should break that high. We can use some channel lines between here and project that to here as far as where a top should come in. This green line is just this line projected up from the low. The hard and fast rule here is that this C wave has to take more time than the A wave, and as of Wednesday or as of Thursday, that was the case. So we could see a top any time here. This gray box represents half the time. So this is half the time of this A and B put together, which is really the ideal time frame for a flat pattern like this to complete. But we don't always see that. Sometimes this might equal the length of the A wave. So we did put a high in on Thursday there. It is beyond the time frame of the length of that A wave, so we should be very, very close to this market topping. If you look at the stochastics down here, there's a beautiful bearish divergence on the daily chart where price came up, made this high stochastics, took a little dip down, came back up to a higher price high but a lower stochastics high. Now it's crossing. So if we get a low below Friday's low in the euro, or you could use the FXE ETF, which I have there. Similar thing going on there. That could be a sell signal. So why is this important? A, because it shows us the time frame, and B, just like what the oil chart is suggesting such a large move, is if this is a flat pattern like that forming, excuse me, that wasn't what I wanted to draw there. The market should come down and actually break this trend line I just drew in less time than this C wave takes to form. So far it's been 4 weeks, so we should see a rapid decline, over the next 4 weeks down below here, if there's a high this week, if that's the case. But if this continues up, the rule is that the higher this goes up, the bigger that move is going to have to be to retrace that trend line. So these markets are set up for some big moves. If the euro falls this hard, oil's going to fall, gold's going to fall, stocks will probably fall. So we could be setting up for just some major, pretty sharp moves here over the coming month to maybe 2.5 months there. So that's all for these updates. I may pass along some other data as I go through some stuff this weekend, but I just wanted to update everybody on that information. I hope it's helpful, and use that as appropriate to guide your own methods in your own trading there. Have a wonderful weekend. Take care.